Welcome, everybody, and thank you for being here. You're going to be spending about an hour with me, and if you have any questions along this presentation, feel free to type your questions in the chat box. And if everybody's ready, let's get started. This presentation is going to be how you can accelerate your cash flow, either generate income, generate wealth through swing trading and investing, and basically how to build $1 million portfolio. And I'm pretty sure that in our audience right now, we have a vast number of traders, different ages, and this is a little bit for everybody in here. So this is basically a ABC on how to secure your future through swing trading and investing while working full time. So you don't have to be here in front of the computer all the time. You don't have to micromanage any kind of trades. We're not going to be talking about day trading. We're going to talk about longer term trading that, and I'm going to explain it in this presentation, that typically lasts from 2 weeks to from 2 days to 2 weeks, or in some cases months when we're talking about investing, or even years. For those of you that do not know me, my name is Anka Metcalf. I am the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and invest in any markets, whether it's the stock market or the futures market or even the crypto market. Whether you're doing day trading or swing trading, whether you're doing investing, whether you're doing options. I have been a professional independent trader focused on day trading and swing trading, and of course, investing for more than 25 years. I come with 10 plus years in investment banking experience. I'm the CEO and founder of TradeOutLoud. I run 2 very successful programs. The first program was created in 2010. It came right after the economic crisis, the financial crisis, I should say, from 2008. I've done a lot of pro bono work from 2008 and 2010. And then I realized that, hey, I am consuming a lot of my time. So I better put, a price to my experience. So I have created swing trading service for stocks and ETFs. And this is our oldest program. It's one of the most successful programs that we're running. And later on, because I do generate my income from the markets, and a lot of traders were curious, what I do throughout the day. Do I sit at the computer all the time? What do I do? It's like I'm not only swing trading. So the cat was, literally out of the bag. So I am also a day trader. I had a lot of requests to have traders follow me in my trades. So therefore, in 2017, I started a trading room designed for futures trading, the Power Hour, which is very popular right now, especially for those individuals that want to generate just income. We do offer trading education for both swing trading, day trading, and investing. And in fact, we're going to have a brand new course that is going to come out very soon this fall, with specialized only in investing. And we're going to talk about generational wealth. We're going to talk a lot about how you can increase your wealth through basically trading only a few minutes a day, trading a few minutes a month. So just putting on some trades, and that's going to be super exciting. I'm super excited. I'm still working on it. I do specialize in high velocity trades. So whether I'm swing trading or whether I'm day trading or even investing, I look for inflection points into the market. So without that being said, if you want to hear more about Trade Out Loud, head on to our website. It is TradeOutLoud.com. So let's get started. What are we going to talk about today? The first thing is how to start making your money work for you. So as you guys know, everybody needs to have an emergency fund, right? Six months at least, right? So everybody should have that. If you don't have that, get a special gig going. Try to generate some income so you can have that sixth fund and park it in a high yield savings account. That's what you need to do. The second thing that you need to do is if you have any savings, you need to start making your money work for you, because the money in the bank account right now is just burning a big hole because of the inflation. We're also going to talk about the best trade setups for explosive gains, and we're going to talk a little bit about charting. We're going to talk about some setups. I'm going to give you some examples. And actually, you can detect these potential plays days and even weeks before they happen. And I'm going to give you the time frames where you can look at, and so you can have the best possible outcome. We're also going to talk about focused timeframes for best returns. We're also going to talk about selecting your trades. How do you select your trades? They're not all created equal. They have to be categorized, and you have to have a really substantial selection criteria. You have to have like a really robust selection criteria in order to try to find these trades, and these trades actually that start going for you. We're also going to talk about how to spot mega opportunities even in the worst market conditions, because let's face it, if you're a day trader right now, you're having a lot of issues into the market because you're not seeing the follow through. And this is, kind of characteristic for the period that we're in. We're right now getting into the core of earnings season. In fact, this week, we have about a quarter of the S&P companies that will be reporting earnings. And then next week is the big tech week. So we're going to have next week and the following week, we're going to have like explosive momentum. Now, for those of you guys that are very young, if you guys have kids or planning on having kids, I'm going to give you some tips that you can do right now so you could set up your kid to be a millionaire. And that is literally by the time junior is about 65. So you are setting up your kid for success. So this is for you guys that are very young in here and have very, very young kids or are planning to have kids. Now, here's the magic trick. If you deposit $7,000 into an investing account when your kid is born and simply invest in the S&P 500, or you can invest in VOO, for example, if you don't like the S&P 500. By the time junior hits the age 65, the retiring age here in the United States, he would have $1 million in his trading account. Now, remember, you don't have to touch that account. You don't have to contribute to that account. All you do is basically invest the $7,000. That's it, period, done. And that's all you do. Now, there's another option. Let's say you're very young and say, gosh, I don't have $7,000 right now sitting around. What do you do? Well, if you don't have the $7,000, invest $60 a month. Can you guys do $60 a month? I mean, we pay so many subscriptions on for Netflix, for Amazon, for Costco, for everything else. $60 a month is for your peace of mind. It's for your retirement. And this would be $60 a month until they're the age of 18. Like, this is totally doable. I'm not talking about $600 a month. I'm not talking about anything else. I'm talking about $60 a month. Then stop contributing. So when your kid hits 18, you're going to stop contributing and let that account be, and never make another contribution again. And guess what? You're going to have a similar account as if you have invested $7,000 initially. And junior will have about $1 million by the time he or she hits the age of 65. This is really cool stuff, guys, but it gets better. It gets really better. What if you educate your kid and say financially and say, hey, you could take this account, and once you get your first job, start investing $200 a month. Oh, that is just mind-blowing, right? Because if he or she will start investing $200 a month, guess what's going to happen? That account is going to double by the time he or she hits the age of 65. So it will double. It could even triple, because if you keep on compounding and compound your profit, and if you get some, ETF with the dividend like VOO, that account can triple. Okay. So you don't need a lot of money to start investing. So there is that taboo that exists, that investing is only for rich people. No, it's not. It's basically how you could get into a comfortable retirement. Okay, so but let's talk about now, because there are so many people that don't have that $1 million in their accounts right now, that don't have a nest egg. They don't have what it needs to retire. They're still looking for a job, or they're still looking for an opportunity out there so they can make some extra cash, some extra income. So this presentation is for you. Okay, so everybody out there from ages, let's say 40 to 80, there's hope. And that is through swing trading. And I'm going to show you a really massive secret. And swing trading is a lot safer than day trading, because you're alleviating and basically you're leaving behind the noise from algorithmic trading and from fast-paced trading. So I'm going to show you something that is literally going to blow your mind. So you're never powerful in life until you're powerful over your own money. So it's time to take some decisions. Okay, so this year my account said that, of course, I have to make my contribution for my IRA account. So what I wanted to do is I wanted to open a different IRA account. So I did. So not a lot of you guys may know, but you can have as many IRA accounts or Roth IRA accounts as you want. You don't have to have just one account. So I have opened this Roth IRA account, and of course the limit this year was $7,500. Guess what? I have started to trade into this account. So swing trade into this account. And I looked for really the creme de la creme trades, the good opportunities. I am only buying like these value stocks in it, even if I'm swing trading, not only investing in it. So I'm only focused on Broadcom, I'm focused on Nvidia, I'm focused on Apple, I'm focused on growth companies in general. So this is an example with Nvidia that you guys can see here. And Nvidia, it starts going, and take a look at this, guys. This is Nvidia, and this is only 5 shares. Do you guys see it? Only 5 shares. Now keep this in mind, because at the end of the presentation, I'm going to show you another slide with Nvidia, but with the final results. So remember, these are 5 shares right here. This is the potential that you could get with 5 shares. 5 shares, almost $450. You can see it right here, right? Okay. So do you guys agree with me that there's so much more in life than this, than sitting in a cubicle or literally retired and have nothing to do, right? Especially if you're in Midwest, or if you're somewhere where winters are very long and you're, don't have a chance to go outside and enjoy the hot weather or go to the beach or anything like that, but you're stuck. Well, there's hope. There's a really great thing that you can do, and that is trading. That is going to keep your mind occupied. It's going to keep you young. So self-directed trading and investing is all about taking control of your financial future, managing your own money, because nobody can do it better than you. Make your own money work for you, and at the best way possible. So swing trading is about generating income. It's sort of like day trading, but you're sidestepping those really noisy time frames, and you're focusing on time frames that are a little bit more appropriate for unchaining you from the computer. That means higher time frame, longer action, and actually a lot more accurate. Why? Because trading levels from higher time frame trading levels are a lot more sustainable than shorter term trading levels that are not they're not going to stop you out as often. Okay. So basically, you don't have to be a math whiz. You don't need to know anything about math, and you don't need to have a finance degree in order to swing trade or in order to invest your money. Did you guys know that every year stocks will move about 20 to 30%, maybe more, every single year, like every single year? And that is a lot of percentage when you're thinking about it. And when you're thinking about what the hedge fund return is, right? They are averaging between 6% and 10%, and 10% would be like extraordinary for them, because you get to pay a lot of fees every single month for them managing your own money. And by the way, they don't even care in, which fund they throw your money or in which stock they get you, because for them, you're still getting paid, right? And forget about those dividends, earning dividends and so on and so forth. So they're getting the creme de la creme. You're just getting, just very little. And that is because, since, I would say 10 years ago, or maybe 15 years ago, people were complacent and they only had their money in 401ks and that's it. They let the big investing companies, run their thing and do their investing for them. But people have gotten smart, and with the progress and with the internet and with social media, people got more educated. And with YouTube and everything else, people got more educated and they're starting to see the reality. And more people are, starting to manage their own portfolios. So yeah, it's true, because every year stocks will move about 20 to 30%. And guess what? This doesn't always happen only once a year. What if I told you that this happens at least a couple of times a year in cycles? And we're in a pullback cycle. So this is like the time where you wish you were Nvidia. You wish you were in Broadcom. You wish you were in Apple. You wish you were in Microsoft. You wish you were in Google. You wish you were in Tesla. This is the time to make your shopping list ready, to get your shopping list ready and to get your shopping cart ready. Because if you have not participated in those phenomenal moves that literally shook the market, guess what? This is the pullback time. This is the time when this growth cycle may happen again. I'm going to show you some examples. So this is, these are the cues. And by the way, these are the cues right here from this move in April all the way to the high that we had in May. And this is basically a 10% move, and a 10% move just occurred, remember, from April to May. So in a couple of months. So this is phenomenal, right? And by the way, we took advantage of this trade. We took it in our stock swing trader program. We obviously were out of it, but we are on top, and I could show you. We sent out some comments in yesterday. I was going to say yesterday's session, in yesterday's newsletter and video, that we're stocking again the cues, right? There's nothing simpler, and in fact, it's a little bit safer to trade the cues around earnings time, because they're not subject to a higher fluctuation than you're having in stocks that are reporting. By the way, from January until May, right? From January till May, till things started to slow down a little bit, right? By the way, since then it grew to about over 500, but this slide shows the progression from January till the top of May. This is a 16%, over 16% move. 16% move from January till May. So that is a 16% growth in your account if you're holding it long term. Now, I want to show you something very, very interesting. This is a stock right here that had earnings. And by the way, if you see this big red bar, it's actually, you may not see it on your platform. I have extended hours here, so that's why. But other than that, you're going to see a big gap. A gap is, I don't know if you guys are familiar with gaps, but a gap is when the price closes, and this was a gap created by earnings. And a gap is created when the price closes the prior day at a certain value and it opens the next day, for example, at a different lower or higher, right? And the fact that it opens either lower or higher, that space creates a gap. So it's a void. So what happened here? The stock gap down, and it gapped down into support zone. You can see here that from the left-hand side, we have numerous highs, and we also have some bottoms. We also have some rising bottoms over here that are only present in ongoing continuous trends. So that means that the stock gapped down, but it gapped down to the prior minor support zone, because these prior highs now become, these prior resistance areas now become support. And we also have the almighty 200 simple moving average. And here we had a very shallow price action activity. So notice the volatility here created by the gap, the continuation of the gap right into support. And then the following day, we had the price compressed. We had the price compressed here in between the prior high and in between the low, right into the support level. And then I saw this, and we were in the futures trading room, and I saw this. I'm like, wow, this is such a great opportunity to buy right here. And we took it long into the program. We took it long over the high. This is our entry bar at a 180 rotation right here. So when the price action switched green from red and took out the prior day's high, and we had a target into the 10 EMA. This was actually our trail right here into the 304.87. That's where I marked it. But this is a really good risk to reward ratio trade, and it worked beautifully. So these are the types of trades that you don't have to wait years or months to actually have access to your funds and make a profit. This is actually a 3-day trade. This is a 3-day trade. And let me show you something really cool. Within these 3 days, you were able to generate 18%. So 18% in 3 days. Remember, funds, the return on your investments at the end of the year with the hedge funds is between 8 and 10%. And here in 3 days, just by knowing what you're doing, you can actually generate 18%. Now, quarterly earnings tradition, right? So that was 2 earnings seasons ago. This was the last earnings season. May 21st, it reported earnings again. And again, we have the gap, right? And again, here, take a look what happened. This time around, it was a 5-minute chart. So we took it as a day trade. So take a look at this breakout point right here. This is the entry bar breaking above the first 5-minute candle, and it rose, guess what? Almost 5% in 3 hours and 30 minutes, 5%. So remember, hedge funds, 1 year, 8% or 6%. This is 5% in 3 hours. So the possibility is there. So if you're close to retiring age, if you don't have your nest egg, if you are in search of generating cash flow, of generating income, of supplementing your income, of increasing your wealth, this may be for you. Swing trading is for everybody. Swing trading is for very young individuals or very young individuals that are in their 80s. Okay, so this is for everybody. So money managers and hedge funds live mostly off commissions and fees. You're just an account number to them. Whether the stock or the fund performs or doesn't perform, they get paid. And this is a very important fact. Barclay Hedge reported over the past 5 years, the average hedge fund return average was analyzed at 7.2%. with a Sharpe ratio of 0.86%. This is very low, and market correlation of 0.9%. This is actually not really great. So if you're educated, if you know what you're doing, because remember, you can lose a lot of money in trading if you don't know what you're doing. So you have to be educated in the market. You have to know what you're doing. You have to know what support resistance is, what a trend is, how it reacts. You have to know exactly, what a buy point is, where to place your stops, how to set targets, how to trail into targets, money management. So there are a lot of components that you need to learn, but you have peace of mind, right? You have peace of mind. So this is Costco. This is one of my favorite stocks, and I shop at Costco a lot. It's actually super close to where we live, and this is actually a phenomenal move that we had right here. So by the way, this is a 24% move, and this is from January all the way to May. And what if I told you that now Costco is just about to do a rotation? Yes. So all eyes on Costco right now, because it's just about to give us some information whether it wants to go up or down. And in case it wants to go up and it confirms our levels, then we're going to go back in long. But almost 25%, 24.50% right here. Measured move from the rotation that we had in January all the way through May. This is Amazon. Amazon again is getting ready for an action. But keep in mind, from January until the peak of May, 30%. Just imagine if you have some trades and you have, let's say, a few shares of NVIDIA, you don't even have to have a lot of shares. Let's say you have 3 shares of NVIDIA, you have 5 shares of Amazon, you have 6 shares of Costco. Think about how you can rank up. And yeah, you're going to have some trades that are going to stop out, but most of the time you have to look for trades and, of course, respect the R system. Okay, look for trades that have the possibility to deliver, look for real clear signals into the market, and always be in sync with the market, because if the Qs and the SPYs are going to have a very hard time moving forward, if the indices in general are going to have a really hard time, then it's very hard to get one of these trades to work for you. So you have to have the market in sync. And this is a tremendous opportunity for the market. This is an election year. Election years are very bullish. So we were positioned incredibly bullish for this year, and it worked beautifully for us. So swing trading and investing is the easiest trading style to make money, but there's a catch. You need to know and respect the rules of the game, and you need to be patient to wait for the setups, because for people that don't wait for the setups, they don't get paid. Okay, so no setup, no trade, right? So it's not about the trade as much, but it's about the risk management, because a lot of traders that are unskilled, they take trades, they don't know, where to place the stops. They don't know if they need to place the stops. For example, when you're investing, you never place stops. You never place stops, ever. You have to trade according to your risk tolerance. In swing trading, you place stops. So you need to know where to place stops so you don't stop out as often. So why is it important to get started, and especially, making your money working for you? Because the money that is sitting right now in our bank accounts is losing our value every single day due to inflation. You guys see, like, you're going grocery shopping, you're, spending $200, you're getting home, it's like, oh my God, well, I have a bag of snacks, some carrots, some milk, whatever, and it's basically nothing. Like, it's not even going to last you like a whole week. So who's swing trading for? Like I said, especially for individuals that have a very busy lifestyle, or are already retired and want to increase their income or their wealth, or generate generational wealth. For part-time traders that don't want to sit in front of their computers all day, swing trading is a wealth generation style of trading, just like investing. All you need is about 10 minutes a day to manage your trades. You can work from home, and you can make your money literally work for you better than, the big guys on Wall Street, the suits, right? And you're going to generate better returns if you know what you're doing. So how do you get started with all this? Well, the first step is to open an account. Open an account with Schwab, TradeStation, Interactive Brokers. Select like a really good broker. You could do Robinhood, or you could do Webull, right? You could do Fidelity, whatever is suitable for you. Do your due diligence. I, for example, trade with Schwab. I have all my accounts with Schwab, and I was just thinking, like, maybe I should diversify. And I'm thinking of opening again on another account with Interactive Brokers. But anyways. Step number 2, determine your risk and your risk tolerance. How much do you feel like you're going to risk, right? And risking, the risk per trade should be, for beginner traders, around 1%. The norm for the industry is 2 to 3%, and you should not go above that. Because if you're reaching let's say, a rough patch, and those 2% add up very quickly. For example, if you're in 2 trades, your account can be down 20%, right? So you don't want to have that. So the step number 3 would be to establish your game plan. Okay, what am I going to trade? Am I going to trade stocks? Am I going to trade ETFs? Am I going to trade a blend of these? And again, what I do for my portfolio is I use a blend. So I have stocks, I have ETFs as well. I'm more driven towards ETF during earnings season, because I want to play a little bit more conservatively. But other than that, after the stock reports earnings, I'm all over it, because I want to make sure that I don't miss a beat. And there are some really good opportunities right after the stocks report earnings, like a few days later, sometimes a day after it reports. I never initiate the swing trade, for example, on the date that it reported. not unless it's a day trade. So you need to plan your trade really well and have a well-established plan as far as where are the entries, and the entries are set used technical analysis. So they're not random. I'm not buying off support and I'm not selling off resistance. You have to have clear setup strategies in mind. You have to know exactly where to place the stop so you don't stop out as often. You have to know how to select your targets and not, I wish it goes there and I want it to go there, because trust me, whenever I get in a trade, I wish for the stock to go to the moon. But that's not possible because they don't go in a straight line. So you have to know exactly, have to have like a money management plan in place as well. Know your risk, know your entries, know your stops. Step number 4 is to create your trading universe. If you're just starting out, you're going to be intimidated by the plethora of stocks or funds that are available or ETFs that are available. So narrow down your trading universe. Select, for example, 5 tech stocks, 2 communication stocks, 2 home builders, 2 semiconductor companies. So have a really good plan in mind, and don't have more than 20 stocks. I would say you could even focus on 10 stocks, but that would narrow your universe a little bit too much. So I would say, select about 20 stocks in your portfolio and, just trade with that at least for the first 6 months. And then you can broaden your trading universe a little bit more, and you can add like 10 more stocks and see what you do. The narrower your trading universe is, the more you're going to be focused on it. And remember, it shouldn't be on a list like this. It should be on charts. So it should be on charts. So you should have like a whole window on your screen full with 20 charts, like 20 charts representing your trading universe. Let's say you have Apple, Google, Nvidia, Broadcom. I don't know. You have, I don't know, some home builders. You have some AMD. You have some Micron, some semiconductors, SMCI, etc. So have it on the chart, because if you're watching the charts, just pop them every single night. At a glance, it should not take you more than 60 seconds to identify a setup. And you're not going to miss a beat if you're doing that. I also recommend to create a strategy. What kind of strategy? I like to trade trends. I'm a trend trader. The trend is always my friend. The trend is very powerful because it's fueled by institutional traders. Definitely, once you have that railroad track set up in the trend, it's very hard for, and if you're selecting the strongest stocks within the index or within the sector, even when a pullback occurs, your stocks being in a super trend are going to ultimately pull back, but they're going to be the last ones to pull back. So you have plenty of time to lock in some profits and to take some decisions. That's why I like trend trades. Trade counter trends for bounces, for example, very short term, and requires more active management. If you want to do that, I sometimes do that, not very often. And I typically do it, for example, on a day basis. So these counter moves definitely last for 2 to 3 days max. And of course, create a strategy, like I said before, with a trading universe, like what stocks are you going to trade? Okay. And this is also according to your account size. It's according to your risk tolerance. It's according to your preference, to your personal preference as well. So, let's talk about swing trading, right? Remember, swing trading is for everybody, whether you're very young and want to generate cash flow, whether you're you're in your 40s or your 50s, or you're in your 60s or 80s. You can supplement your income with swing trading, because swing trading is the sweet spot between day trading and investing. So you're not going to hold positions as much as 3 months, right? You're going to typically hold a position from 2 days to a couple of weeks. That's it. And it generates high probability trades that offers the best chances of success. And you're sidestepping that super, super active day trading environment where you are going to deal with all the algos. Focus time frame. So what is the time frame that you should have those charts that I've mentioned earlier on your screen? Should be daily charts and weekly charts. And you could toggle, you could have create 2 screens of daily charts and weekly charts for your favorite stocks, or you could just have the daily charts. I prefer to have the daily charts, and then if I see something that is setting up on the daily, I put it on a different screen and I go daily, weekly, monthly to see what the environment looks like. And it's all based on technical analysis. This is so cool because you're not going to have a say. The chart is going to speak to you. So the chart is going to tell you exactly what you need to do. Swing trading is not about capturing the entire trend. It's about finding the best possible entry opportunity and profiting from the stock's momentum, up move or down move, but not living through reversals. So once the price goes up at the first sign of reversal, guess what? When it reaches this inflection point right here, you're out. You're going to apply a management technique that will allow you to exit the trade with profits, because you're not going to live through the pullback. Investing is buying at the rotation here and living through the stock, right? Living through earnings, living through months and months. So swing trading is a simple strategy where you enter trades on a trade setup, and basically when the price breaks above the pullback reversal, so you have, let's say, a red candle and you have a green candle, and when the green candle takes out the prior high, like for example in here at a 180 rotation, or you're going to have bottoming signs or a bottoming tail or something of that sort. So you're going to get it in here. And then at the first sign of reversal, you're out. So basically you're not going to capture the bottom and the top ever, but you're going to capture the big majority of the core of the trade. Okay. The big majority, this is called a sweet spot. Okay. So you're going to be banking the profits over here. Okay. This is the sweet spot right here. So the elements of the trade is the entry. So you have to have the pre-planned entry. You have to have the stop. Okay, so you have to have a firm stop. I use my stops below pivots always, because those are support zones, and I always play my stop at support zones when I'm going long. And then let's say I hit once when the trade is moving, I apply money management for the trade, but definitely when it's entering a rotation phase, then I exit the trade. What I wanted to add here is that share sizing is very important. So you have to make sure that you position size for each trade. Don't just select 1 trade or 5 trades or 100 trades or 2,000 trades or 20,000 trades to get in long or short. Remember, decide on your risk level, your risk appetite, whether it's 1%, 2%, or 3%, depending on how much experience you have into the market. Again, less experienced traders can go to 1%. Experienced traders can go to as far as 3%, and then position size from there and see how many shares you can fit into that 5%. And that 5% is per trade per account. Okay, so it's 5% of, it's 2%, for example, risk from your whole entire amount. That is going to be 1 trade. Okay, that's going to be 1 trade. A little bit of money management 101 here. All right, now things that I like to focus on and strategies that I like to focus on in particular are breakouts. These are my favorite trades. Breakouts take a relatively long time until they start exploding, and the more they are basing into the frothy highs, the more they have chances of breaking out. Oftentimes, and not often, I'm sorry, seldom times, they happen to have a shakeout. So I don't know if I want to show you a chart here on Tesla. Just because we're talking about it. All right, so this is the type of base. So first off, we had support here. Then we had the base, we had the chop back and forth, and this is a shake and bake. This is called a shake out, right? So what they do is institutions, and this is totally legal. I don't know if, I'm not going to get into it right now, but this is totally legal. A lot of funds, what they do is they do a forced sell. and then they buy right at the bottom. And you can see here that this bar has so much velocity, right? And you could see here the volume is increasing. So this is definitely an institutional sign. So definitely institutions that want to grab more, they're not going to grab into the breakout like we do. They want to grab as the price is going down and into the lower part, and then driving the price back up, and it's back into the base, right? Because if we, for example, cover this, let's say we cover this, right, and let's say you ignore this, you would have almost like a linear base. And this is the secondary breakout that has happened here, and you can see why I love breakouts, right? Okay. All right. So with that being said, breakouts are definitely really amazing, are my favorite strategy to trade. So how to select winning trades and winning stocks, and how do you know what stocks to trade, right? So at this point in time, let's say, it's July 23rd. What stocks do I have on my watch? I mean, how should I select the stocks right now? It takes up a really proven strategy to select high-end trades, day trades, swing trades, investments in stocks and ETFs or whatever, or even futures if you want to swing trade them. So the stock need to be fundamentally sound for long, and medium trading. So I'm not going to select something like Boeing, for example, or I'm not going to select something like Nike, right? Because or I'm not going to select something like Starbucks. I'm going to select something that is fundamentally sound, and it's a safer type. It's almost applying the principles of value investing. Fundamentals have to be in line with technicals. You don't have to know fundamentals, and like I said, you don't have to be a math whiz. You don't have to have a finance degree. But how do you get fundamentals? You watch earnings. Did it beat earnings? Did it, what did it do in earnings? And if it has like a record of breaking earnings and beating earnings and having a good projection, then those are the trades, those are the stocks. And of course, it has to have a good technical. What is a good technical? A good technical means that the stock needs to be either uptrending very strongly, or basing, or doing some kind of a setup that will promote higher price action. Buy stocks that are on sale. On sale means pull back, right? Because it takes the risk out of investing and creates great return on investment. So when the markets are higher, very few can participate in that up momentum, right? Because you don't have entries. You don't have entry opportunities. The market is just flying high. Like with Russell, if you didn't get Russell at the breakout, like you were just staring at it right now, right? Or last week, because it was just flying. It would gap up, go, gap up, go, gap up, go. Like you can't get into it, right? Not unless you jump in, which is totally novice, and you should never do that. So buy stocks that are on sale. When the market pulls back, that is the best trading opportunity, okay? And this is a moment to remember, because this is the moment to celebrate. When the markets go red and they crash, this is definitely a really amazing opportunity, because it means that it will create opportunity for some really next big movers. Because stocks, you can't, or anything that you're trading for the matter, they are not just going to go higher and higher and higher and higher, right? They need to pull back because they need to be on a stable foundation, right? When you're building something, a house, right, it needs to have a foundation. Same with stocks. You need to have that foundation from which that foundation can provide a good spot for the stock to go up. It's a really good foundation for a reversal. So when to buy? Definitely when to buy is when certain events happen in the market. We're having a very turbulent market right now. It's actually influenced by everything out there. There's a lot of uncertainty. The pullbacks make the sharp prices go lower to levels that become appealing to the buyer. Exactly what I said earlier. What are these events, right? Election years. Election years create a lot of volatility and a lot of opportunities. Other than that, we had some pretty major events. Let's say, for example, in 2000, we had the dot-com bubble with the crash. And I'm talking about big crashes, and this is specifically for investing. 2008 financial crisis, 2016 election with the massive breakout that we had in November, the 2020 pandemic, wars and everything that is going on and creates a market pullback, a substantial or even a black swan, will present massive opportunity. Do I need these events to get in? Yes, for investing purposes, but not necessarily, because you can leave room to add. So when you get into the trade, you don't have to put your eggs all in one basket, and you don't have to get the whole, let's say, 1,000 shares of Apple at one point. You could actually scale in, and you could actually compound if you're into investing. And the way I do it, I compound in my stocks, and I contribute to my stocks weekly. Okay, weekly. So I have a set of investments where I contribute weekly. Okay, and I have a set amount of money, let's say $250. I'm just giving an example right here, that you contribute to the market, and automate this, because this is what's going to create your wealth. Compounding is what's going to create your wealth. So put in $250 a week, and you're going to see where your account is going to be, because you're going to get a better price average into, for example, if you're buying VOO, or if you're getting, I don't know, S&P or whatever it is, or the SPYs or Qs or whatever it is. Focus on companies that have thrived and survived over the years. Be diversified, but I'm not saying like you should be like overly diversified, like but be a little bit diversified in the sense that, you know, you have tech, you have semiconductor, you have this, you have communication service, blah, blah, blah. So you have to be a little bit diversified, but make sure that you have some value stocks right there. Stay away from high risk industries like airlines, hotels, biotechs, unless you swing trade or day trade. Take a look at NVIDIA here. This is a chart from January all the way to the top in June that we had here on this slide. And the return is 139%. Wow, 139%. This is amazing, right? So always be in sync with institutional footprint. Follow the cycles. Don't say like, oh my gosh, NVIDIA, you know, I'm going to short it, it's going to go down. Why don't you wait for that pullback to happen, and then you can buy it back long? Institutional buying and selling creates these currents, and we have to follow the institutions, because the institutions and the power that they're throwing into the market, the size of the trades that they're throwing into the market creates the follow through. And ultimately, this is what we want. Whether we're day trading, swing trading, or investing, we want follow through into targets. We want to grow our accounts. So institutional buying or selling occurs during very strong trends on technical pullbacks. And these are called accumulation areas. The buy zones provide clear buyable points, and we should definitely do that as such. I'm going to give you some example of some trades that we had. This is a breakout trade that was executed. We had a double bottom support. This is the originating trade right here at this inflection point, 318.35, and the stock moves higher. So these strategies are very, very important. This is another trade where we captured a really strong momentum. And by the way, this is Moderna. It had a base. Notice that the price action is trading above the 10 exponential moving average, which is set into a power trend. And take a look from the breakout to the high, 35% gain. So we managed to get like 30% out of it because we didn't close it at the very high. But we took 30%. And by the way, guys, this is a daily chart. So it happened in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And this is where we exited. Actually, I think it was 160 for 30%. In less than 2 weeks, guys, 30% in less than 2 weeks. Okay, so how to select winning stocks? And when it comes to trading, no one has a crystal ball. It's just work. 99% technical, 1% fundamental, because you need to watch out for earnings and earnings results. First of all, you have to have like a good history of earnings, 3 years minimum. And so I don't trade, swing trade, or invest in IPOs, by the way, or at least 3 prior quarterly earnings beat expectations. Enter trades after they post earnings. I'm never getting ahead into it. I may hold a trade through earnings if that's a long-term trade. So for example, NVIDIA, or Broadcom, you're not gonna see me set stops in those stocks. Okay, you can if you're really want to swing trade it, but other than that, I have it for long term. Buy companies that have really good earnings and sales. Look for companies that make a splash. You want companies that make a splash, new products, services, launches, etc. Look at the technical chart because you need to trade with the trend. I cannot emphasize enough. You need to stay with the institutional money flow. Volume increases. Look at the bottom of the chart. Have that regular volume. It's not sophisticated. It's not volume profile. It's not any mumbo jumbo. It's volume. It shows the participation into that day, into that month, into that time sequence. So an increase in volume means that institutions are legging in. Look for spikes of volume. Look at ranges, near all-time highs, fib locations, etc. Look for volatility contraction. Volatility contraction are those small, narrow candles. The small, narrow candles is what create that explosion, that big splash. You're not going to see big moves occur from big candles. You're going to see like these big moves occur from price contraction. Positioning within a sector and indices, leaders and laggers always go for relative strength when you have a relative strength market, and go for a relative strength stock and sector because they're going to outperform. A relative weakness in a weak environment. Pick strength for maximum momentum higher and weakness for maximum momentum lower, because yeah, you can short as well if you're swing trading. Institutional participation accounts for 85% of the market volume. So yes, pay attention to that. Block trade stock pools, I keep in mind everything. This is Microsoft. This is the breakout that that we have done. And this from January all the way through March, you can see over 15%. This is Burlington, double top formation. This is, again, a monthly chart. So it has the potential to run up higher, okay? Also, Apple, take a look at Apple here. We could actually look at some stocks. I don't know if we have some time. We'll see. Okay, so another thing that I wanted to share with you is dividend stocks. I don't want to end my presentation here without mentioning dividend stocks. Dividend are very important because this is free money that the company pays you just because you're an owner of that company. So what happens is that that reward that you're getting, that little bonus, that dividend that you're getting, throw it back into the market and definitely buy more of that stock. So for example, some of the 10 highest dividend companies are Comcast, Altria, let's say Johnson & Johnson, Verizon, Duke Energy, PNC Financial, Kinder Morgan, Dow, Sempra, etc. But also one of my favorites is VOO. So take a look into that as well. 10 ways to generate income swing trading. Let the chart do the talking and guide you through the trade, and be patient. This is key right here. Pay attention to technicals and of course sizing. How much size? Remember that 2%. Patience to wait for the pattern, and risk level. Select the proper time frame for short-term swings versus medium-term swing. Don't overthink, because when you're overthinking, you're literally putting things into your head. So the first instinct that you have when you look at a chart, that is the right instinct. Other than that, you're overthinking. So if you see the trade set up there, you take it. The first impulse is going to be the best one. Your mind has photographic memory, so it remembers positive feedbacks from the market, and it also recognizes bad ones. So when you're going to see a chart pattern, you go, ugh, I don't know. It means that your brain recognizes it's not a good setup. Mindset is a really great thing as well. Become a good technical analyst. Keep it simple. Look for relative strength or weakness depending on the environment. Go with the trend always, and don't be stubborn in trading. Okay, so the 6 steps that you can take to become a self-made millionaire is, the first one is to do it now. Don't delay. Delaying is your biggest enemy. Learn to create wealth via swing trading and investing, or generate cash flow or extra income. Learn the art of charting, because when you learn how to chart, okay, and when you learn how to read a chart, that is your freedom right there. Learn investing to multiply your money over and over again. I did mention some techniques here with compounding, with dividends, etc. Understanding the bow and arrow effect. What is the bow and arrow effect? Is that you need to spend money so in order to make money. So what that means is that the bow and arrow first, you take it back and then it springs forward and it goes to infinity. And avoid the biggest expenses. We don't have time to tap into that right now. My time is almost up. I have like about 4 minutes to go. So how do I get over my fear of trading and investing? Because a lot of traders go like, oh my God, I'm fearful. What if I lose my money? What if you cross the street and a car hits you? What if you drink a glass of water and you choke to death? You know, like that's the type of risk that you have to take. So first of all is to find a mentor, somebody that has already achieved the results that you want to achieve. And this is how I've done it. So I've hired a lot of mentors to get me where I am right now. And I hired them to get me fast to where I wanted to be because I didn't want to find myself, spending 5 years in, trying to discover and reinvent the wheel. Mindset, eliminating all the limiting beliefs that, oh, I'm not good enough. Oh my God, what if I'm going to lose money? I hate all the rich people. I hate everybody else that is making money. Why is that person buying this and I don't have this? Just stop doing that. Get into that millionaire mindset. And then execute, just do it. Just do it. I have a special offer for you guys. We do have the Stock Swing Trader program. It's the oldest program in the book, and it covers stocks and ETFs. We're delivering stock trades, stock swing trades to our members since 2010. That's right. For 14 years, we have been in business, and we're one of the leaders in the industry because we have been for so long. We have transparent track record, and I do have a transparent track record since 2010. It is a service for self-directed traders. We will show you how to navigate the market without being chained to your computer. The current price is $299. However, for the first 10 traders, I'm going to show you exactly what you get with this program in a few moments. The first 10 traders to email us at info@TradeOutLoud.com will receive special price of $199 a month. So email us with the subject, say, I want the $199 a month, period, for the stock swing trader, or just want the $199 deal. And we're going to send that information for you. So again, this is just for the first 10 traders. This is NVIDIA with 50 shares. You can see it right here. So I compounded in NVIDIA, 50 shares right now, $4,235. And this is with 50 shares. I'm not even talking about having a lot of money to get started. So first off, if you want to learn more about the program, you could actually go right here. But remember, if you want to get the $199 price, you have to email me ASAP because only the first 10 people are going to get with $199. Sorry, we don't have a lot of spots. I do answer a lot of personal questions, and I do answer a lot of emails that go back and forth. You're going to get this. So what is the program all about? You're going to receive a newsletter every single Monday night, and the newsletter is going to be about the context of the market and what we're expecting with earnings schedule, with economic events. You're going to get a full-blown video. Yesterday I sent out a video that is 40 minutes. This is the video. You're going to get it right here. It's going to be a recording, yours to keep forever and have reference to it. Then after that, you're going to get access to the real-time performance portfolio. You're going to get this special link where you're going to see every single detail. Like even if I make like a little change, for example, an update, you're going to see it right here. Other than that, you're going to have access to earnings calendar. You're going to have access to the major economic releases. You're going to see the weekly and monthly performance right here, which sectors rocked and which lagged. And not only that, but you're going to get access. So like I said, this is the performance portfolio that has all the bells and whistles. It has a position size calculator right here. We talked about position sizing, how important it is. This is where you're going to input your data and find out how many shares you can actually buy of that particular index or ETF or whatever stock it is. So you risk your 2% or 1% or whatever it is. You're also going to get access to real time. This is a private X account. This is a private X account where you get updates. Okay. Updates like, for example, NVIDIA, Broadcom right here. Q is still above 480. Tomorrow, if over 499, we're going to be adding and we're going to be placing a stop here. Walmart long over, and you can see here the parameters. So you can see a lot of updates. It's no chart, no fluff at all. It's just purely technical. So I guess my time is up. Don't forget, guys, that if you want in, we have this special offer. It's $199 a month. You're going to be grandfathered in forever. As long as you're going to stay in the program, it's going to be $199. It's $100 off our regular program. So it's a big deal because we never make any discounts on our programs because I don't believe in discounts, like offer something for $1,000 and then, oh wow, buy it now for $50. You get what you pay for. Okay. So again, the first 10 traders that are going to email me at info@TradeOutLoud.com will receive special price $199 a month. That is $100 off. So thanks so much, David, for having me here today.